everyone. Welcome to Thursday. And as promised, I'm going to do a review on Gentrack. So before I get started, just remember this is education purposes only. It's certainly not personalised advice or seen as any recommendations or anything like that. If you want personalised advice that's suited to your individual circumstances, then you do need to obviously go and talk to your own financial advisor or share broker or the likes. Okay, let's share my screen. Right, so as promised, this is Gentrack and it's got the ticker code of GTK here in New Zealand, and they also trade on the Australian index as well under the same ticker code actually. And you find that with a lot of companies here in New Zealand, they are dual listed, and it obviously just gets better scope and things for the companies by doing that. So I've got the 2-year chart up here for Gentrack, and as you can see, it has gone through a period of consolidation, going through nothing, just going sideways. A big thing that I want to show you is look at this here. We have got from 1 week to the next, we've got a gap. And that is very often a positive surprise or a positive indicator when you're looking and analysing any share charts. Another thing to look at as well is you're getting a little bit of, or quite a bit of increased volume. So you can see along the bottom of the screen here, there's sort of not a lot appearing by way of bars, but every now and again we've got these quite strong green ones which pop up, which indicate that there is a lot of buying pressure. The little red ones are more selling pressure, but as you can see, they are certainly dwarfed by the buying pressure. So that's a really positive indicator, especially here for Gentrack. Okay, this is a really good strong candle. We've got a lot of buying pressure here. So as you can see, it's been going up in a very strong upward trend, basically since November 2022. Now, the reason I'm wanting to show Gentrack today is because I showed Air New Zealand last week, and then I went back and talked more about Air New Zealand on Tuesday's video. So I wanted to show you something that was the complete opposite of that, and this is why it's reached my interest when I look at shares to potentially invest in. So I'm just going to scroll back. So Gentrack listed on the New Zealand Stock Exchange about June 2014, and as you can see, they had I'll just get a bit smaller again. They sort of went sideways, and they had a very, very strong performance. Okay, they had a really strong run up, and this is why, in my view, you don't want to stand in the path of the least resistance. So that is, in this example, the share had been going up. It reached a high of around $7.30 odd. Obviously went sideways, and is this COVID? No, this is COVID over here. Okay, but it trended down, a little bit of an upturn again, and then we had some downward pressure. Oops, crikey, trying to get this right. Okay, just going back, we had a gap down here. Now that is very much a negative signal for a share, especially given we've got 2 red candles in a row. And as you can see, it plummeted, and it really probably hit a low point around here of about 92 cents. From then, as you can see, it just went sideways. It went sideways for a number of years. So that was 2020. And it wasn't really until here, back in November 22, that we started seeing all of a sudden growth. Now, as to the reasons why, I've got no idea, because I just look solely at the charts. I'm a technical analyst when it comes to looking at which shares to buy, and this is the sort of thing that I'm wanting to look out for. So I'll just go back, bring that back to the 2 years. So that was the big breakout that we saw. We then had a very strong gap here, which is a positive indicator. But if you look at this chart on the whole, there are very, very few red candles. And now, as you can see, we're trading at just over $8.03. And that is the highest that the share has ever traded. And it's like I said, it's the path of least resistance. I don't know where tops are going to be, and I certainly don't know where bottoms are going to be. But I tend to favour shares that are in a strong uptrend, and this is certainly one that is. And it only popped up on my radar a couple of weeks ago. So let's go and put these moving averages on. 30, sure. and we'll put the 15 on as well. Very interesting. These moving averages, they crossed basically after the strength of that strong candle back in November 2022. And as you can see, they've been trading above this the whole time. Every now and again, it will pull back to that 15-week moving average, but it's still in a strong uptrend. You could see that it potentially pull back to this 15-week moving average, because that is what happens. And you can see here where we had this gapped away from the 15-week moving average, then it just went sideways for a little bit. The moving average is caught up, and then it's gone on again. Okay, so we've had a strong performance from November last year. Then we went sideways, and it's caught back up to those moving averages, and now it's continued back up again. So this is what I want to look for in a share. In fact, this is a very good looking share. I really like that gap back here, but it's only just hit my entry signals, and that's usually because I want to check that the main board is performing well. If that's performing in a good positive direction, then it means that I will then start looking to see what other shares are perhaps trading in a positive direction as well. Now I will take off the moving averages, and we'll just have a look how it compares to the main board for our stock exchange. So as you can see here, it's well and truly outperforming our main board. And this is another thing that I look for. I want to see that it's trading above it. I also want to make sure that it's been trading above it for at least the last 5 weeks, because then that means that, again, it's potentially a strong performer. It's a strong sector that is doing well. So that's something else that I want to look for. I'll take that off. What I then move down to look at is underneath, I've got the MACD, which stands for the moving average convergence divergence. I don't put a lot of reliance on this, but it is, I mean, through here, it could be showing that we could be going through a little bit of sideways, maybe a little downward pressure. I don't know. But I'm still happy to hold this share. It's a very, very strong one. Down below here, we've got the RSI. So that's a relative strength indicator. And that one indicates whether there's buying pressure or selling pressure. So when it hits a point of 70, that means that it's potentially overbought, and 30 potentially means oversold. Now, if it hits a point of 70 or 30, overbought does not necessarily mean sell, and oversold does not necessarily mean sell, because they can keep going in those directions. They can stay overbought for some strong period of time, and you can see that. Look at this. It's been trading up around sort of that 70 to 80. I'd hit a 68, but up there at 80, 81 points. Okay, so overbought can stay overbought for a long period of time, but these are things that I'm looking at. If we go back to this MACD, we can see basically when these red lines came in, the bars down the bottom, this share went into a sideways pattern. Okay, it didn't generally trend down. And if we look back historically, again, we can see that the green ones, we've got generally it's going up in value. These red ones, it goes in a sideways pattern, and then we see another form of strength again. So these are all good indicators on this share, and that's the sort of thing that I want to buy. It's the path of least resistance. The other thing too is that a share can, when you're buying a share in an upward trend, definitely have a stop loss in place, because you don't want to give away all your profit back to the market, like what we saw earlier here. After the share first listed, it had that strong performance and then dropped off down to a few cents. We don't want to be doing that, but at the same time, we've got to give our share room to move so that it can have the odd down week, as we can see in the chart. But also it means that if it wants to go again and have another strong run and performance, it's got that ability to do so. And that's what you tend to find, is that quite often when shares hit highs, they will keep hitting new highs for some period of time. How long, it's not set in stone, but these are things that we look for. So I hope that's helped. I'm loving these questions that are coming in and providing you with education. So I really hope that's helped. Now, speaking of education, if you've not heard, I am running a 5-week 1-hour session per week, and it's an elementary course on investing in the share market. Great if you want to know how I get started, what types of investments there are out there, that sort of thing, how to even choose your risk profile. So it's, like I say, it's a very elementary course. This is starting on the 2nd of April. I will record them for those people that want to join that may not be able to attend live online. And obviously you'll certainly be able to come and ask me questions, and we'll have some workbooks to work through and things as well. Now, these are courses that are normally, well, they're backed by the Retirement Commission, and we normally run them with corporates. They're not normally available for individuals. However, the Retirement Commission has restructured, and we're now able to occasionally bring some of these out to the public like you. So if this is something that you think you'd like to join in, I'd love to have you come along. It's only 5 weeks, and it's an hour each week with a little bit of homework, so that you can do your own research and then come back in, and we can move on to the next topic. I'll attach the notes to that as well. But until then, have an awesome Thursday and a wonderful weekend coming up, and we'll see you next week. Thank you.